Alrighty, folks, we are lucky enough at One Rental at a Time to have experts from across the industry with a wide range of experience. And on Mondays, we speak with Taylor from Life Goal Investments. How you doing, sir?
I'm doing well. It's super excited because this is kind of the intersection of our two areas of expertise, right?
Absolutely, absolutely. And one of the reasons I want to remind people, if they're just catching you for the first time, is you spent 10 years on Wall Street basically helping nine-figure families diversify and make sure they maintain their wealth. That was essentially your job for a decade. Is that fair?
That's fair. That's pretty much spot on. Correct.
So, I'm gonna reference something that is going around social media today, or at least the last week, about Barry Sternlicht. I jokingly refer to him as Billionaire Barry because I'm still shocked that a billionaire goes on CNBC with PowerPoint. I can't fathom that. That's a sign of stress, in my opinion. I don't know if this hit your radar, Taylor, but Barry is selling 2,000 single family homes. Apparently, Sternlight Capital has 3,200, or will have had 3,200, and they're selling more than half of them. And the talk track is single family homes are at a peak. The billionaires are smart money. They're getting out. Maybe they're hard to manage. Lots of things. All the doomers are talking about this. As someone like yourself who used to work with the Richie Rich, why else might a billionaire be selling single family homes today? What do you think?
Well, not only is he selling single family homes, but it's not like he's pruning or just trimming his exposure. He's cutting it by more than 50%. That is taking a look and say, okay, I want out of this business. Why do I want out of it? Well, maybe there is a liquidity crunch that's taking place underneath, and I need access to that capital now.
Yeah. Because again, if you look at Sterling Capital's portfolio, I think single family homes make up something like 2%, might be 3, might be 4, but low single digits.
Yep.
But you flip that coin over, there's a 96% basically in commercial. And I cannot imagine a worse asset to own today, given cap rate explosion, NOI collapses, higher debts. He is staring at losing properties or having big checks to write. So
Correct.
I propose this is a billionaire grabbing life preservers and throwing them overboard, going, I need help, I need cash, I need cash. That's what I think's happening.
Yeah, I mean, this is a lot of this is a function of the macroeconomic backdrop, right? There's no surprise as to what's going on here. The Fed has raised rates at it's not an unprecedented rate, but it's an unprecedented rate in the last 4 decades, from 0% to 5%, seemingly overnight, right? 15 months or something like that. And with that, the cost of capital for financing these big operations that he's financing in the commercial real estate have gone up dramatically. And he's experiencing that. And on the other side, the demand for what he owns. And I don't know the specifics of his underlying portfolio, but nonetheless, commercial real estate in general has a black eye. And for the work from home reasons and a plethora of other reasons that go along with that.
Yeah. And again, the reason that Barry and others, and I don't mean to pick on Barry, I just think it's funny to call him billionaire Barry. There's a lot of commercial real estate billionaires who I would propose, Taylor, are not billionaires
I
today.
was gonna say, are you caveating this? Because I feel like that is
Yeah.
potentially up for debate.
Yeah. No, I think there's a lot less billionaires today, especially because again, real estate went one direction, for 40 years, right? As rates fell, commercial real estate. And over the last couple of years, there's been more and more commercial real estate investors buying it. What now in hindsight will look at stupid cap rates, 3.5, things like that. And the rate environment we're in now, you're at least at a 5, if not higher. And that's a huge move. That's a 1.5 that can destroy value.
No doubt. And I think this is a lesson to be learned across asset classes, right? When you're buying into something, you need to make sure you have a real margin of safety. And if you're buying at these super, super low cap rates, the margin of safety just isn't there. The cash flow better continue to grow, or that asset's going to be in trouble over time.
Yeah, there were billionaires, or at least reported billionaires, celebrating buying Class A office at 3.5 caps, like it's going to go lower. I mean, what are rates going to go negative? I mean, I don't get it.
Right, right. Are we going to become Japan, right? And fix rates, yeah, at zero or negative? Yeah. So I totally agree there. And when you look at all the major metro areas, the commercial side of things, like, so New York's a good example. The residential side of things are absolutely booming in New York City, absolutely booming. Rents have never been higher, but the commercial side of things, they've also never seen higher vacancy rates.
Yeah.
So it's really this stark dichotomy between, and think about things broadly across the US. Residential has, continued to be on this upward trend, and maybe it's moderated, moved sideways, down, up a little bit, whatever it is based on mortgage rates. But commercial had been on the same trajectory and now has hit this ultra pivot point on the top and crescendoed
Yeah.
back downwards. And we haven't seen the extent of where this is going to go. It's really kind of up for the macroeconomic economic background to drive based on rates, based on needs for workers and office space, et cetera. And how does that work from home environment transition back to working in the office? Does it not? It all depends on who you speak with.
Yeah. And then the other thing we just got to realize that these billionaires are facing, or it could be pension funds, it could be anybody who really owns the asset, is there's nothing really trading right now.
Right.
So the underlying value is a guess.
Right.
And again, the reason the commercial pain is so obvious is there's a debt market that resets. I think there's something like $1 trillion or 1.5 trillion resetting in the next year and a half. There's going to be some price discovery, and it's not going to be fun.
No, it's a good point. It's like the private equity markets as well. So you look at like some of these massive funds that were launched overseas in the Chinese and the Japan market. One of them just wrote down $32 billion in losses last year. 32 billion. And it's like,
Wow.
by the way, that's their own marks because this is
Yeah.
private stuff. It's not trading. So what is in actuality? It's a lot more than 32 billion. I can almost guarantee it. But
Yeah.
that is the point. And you look back to kind of how we handled things through the subprime debt crisis that we had in 2008, when things start getting marked to market, and just for context, what mark to market means is probably obvious, but when things start getting priced to what they can actually sell for, all of a sudden you start to get portfolios that look massively, massively different. And to your point, is billionaire Barry actually a billionaire at that point when you have to say, okay, this is maybe what you have it on your books written out as, but if you had to sell it today, or if you are actually selling it today, what is the price you're getting for that?
Yeah. This is why I think Barry has to sell single family homes, because everything else he owns is underwater.
Right.
Right. Because
You're
again,
selling your good asset to fund bad assets, which is something you never, ever, ever, ever want to do, is sell good to feed bad. That is the opposite of good capital allocation. You want to do the exact opposite. You want to sell your losers to fund your winners.
yeah.
But that is not what's going on.
No, and again, I really do believe that a lot of these billionaires are they're going to be a mindset of survive to 25, survive to 26. So they're going to sell the good to simply buy time.
Yep.
And again, I think billionaire Barry, again, was selling these homes, is not calling a top. He's not calling a crash. He's basically saying, I have nothing else I could sell.
Yep.
It's just I have nothing else.
When you show up, to your point, like this is super anecdotal and everything, but when you show up on CNBC with PowerPoint slides, it's because you don't want to mess up and say something wrong. You want to
Yeah,
have absolute scripted nature as to what's going on. I'm going to say exactly what myself and my PR team says that I need to say, and I don't want to deviate from that because I might stub my toe and things will react poorly.
yeah, exactly. And again, billionaire Barry, when he went on the first time with PowerPoint, since then his mortgage company has gone bankrupt. BK. His REITs have had I don't know what they're called, redemption requests that he can't meet. And rates are up 200 basis points since that first time. So, he's in a world of hurt. And I can only imagine how stressful it is. I mean, you're staring at a portfolio that you probably built over 30 years. You probably know the asset is good, but today it's just not. So you're trying to buy time to get to the other side because your belief is office will be back, retail will be back, but it ain't today.
Yeah, and does it? So retail, depending on what retail you own, up for debate, right? Office is, and so you speak with Kevin O'Leary from Shark Tank, and he says, "Listen, office is never coming back." He said 40% of 40% of the businesses I own, and he's on Shark Tank, so he owns a million of them, right?
Yeah.
I think he said he owns 91 or something like that.
Jeez.
He's like 40% of the businesses that I own don't have an office.
Yeah.
And he's like, they won't have an office because frugality as an entrepreneur is your ultimate key to success. You can't control demand, but you can control you can control costs. So if office space is something that you don't have to own and you can control that cost to zero, that just gives you longer burn rates as a company. And does that change over time? We'll see.
Yeah. A lot of stuff going on here, but again, there is, you can look at it one of two ways. When billionaires start selling stuff, you can assume they're calling a top or a peak, or you could look at the bigger pie going, don't want to be him right now. Because again, I think there are some billionaires who are actually worth negative $1 billion.
Right.
Right. I think it's gone against them so hard there. They may and again, I'm not calling any billionaires to go out of business, right? They have reputation, they have size, they can get extended and pretend, but it's not going to be fun for a couple of years.
I think over the last 5, 10, and you're in this space, so you can speak to it better than I can. 5, 10 years on social media, so more like the last 5 years, real estate has been the asset class that you can't lose in. That's how people present it.
Yeah.
Buy, leverage, and continue to compound it over time, because real estate does nothing but go up in value. And whether that's residential or commercial, I think we've hit a bit of an inflection point where that trajectory upward, which was a double black diamond steepness going upwards over the last 3 years and made every real estate investor in the world look like an absolute genius, is now coming into question.
Yeah. One more topic on that that really bugs me and why I think there's going to be a lot of commercial pain. There are two things that happened in the last 5 years, to use that time frame. One, there was this mantra that bigger is better, that you were a loser if you didn't buy 50 units or bigger. That's not feeling very good right now. And then probably the most painful thing is this thing called syndications. I've been to a couple events where these brand new operators who couldn't spell real estate were raising millions of dollars. And in the environment we're in today, a lot of that equity is going to zero. And we have a great example in Houston, Texas, where a bad operator secured $100 million in equity and burned it in 11 months. A lot of that's coming.
One of the things that I think that speaks to, and not to get down a rabbit hole here, but one of the things I think that speaks to is the bigger is better thing is all about scale. And again, at the end of the day, like, there is no such thing as a free lunch. Sometimes the hand-to-hand combat of one-on-one, making sure every single door property that you buy is a good cash flowing instrument. Yes, there's more work associated with it, but your margin of safety, to talk back to the point before, is so much higher than it is risking everything on one 50-door unit in the center of town, that if that office space and the high rise across the street is no longer needed, all of a sudden there's this there's this trickle down effect that comes along with that. So, I think in anything, and I do think, and maybe I'm just pointing fingers here, but I do think in the real estate business, there was this, hey, there is no lose. No question. I don't know. That's my takeaway as to the outside perspective, looking in at some of the social media people out there, is that was the general conventional wisdom.
Yeah, and then the last thing, and the reason I keep talking one rental at a time, it's going to become painfully obvious. I've been doing this 20 years and knew it was obvious, but many don't. It's the debt structure. It's always the debt structure. You get into a 30-year fixed rate mortgage on a single family home, duplex or quad, the cost of capital.
Correct.
You're into a commercial asset with a 25-year amortization, a 5-year term. You don't have control. And for 40 years, it worked, right? 40 years, rates down. Not so much
now. Even the brightest macro economic minds have been incapable of forecasting rates. In the short term and the long, whatever it may be, they're not good at forecasting rates. There are so many things in the economy that drive interest rates that, one thing can COVID happens, throws it out of whack. Inflation, starts to shoot, all that stuff. Yeah, macroeconomic backdrop of interest rates that is super important on the real estate business is very, very undeterminable. So your point of controlling cost of capital is so well put.
Yeah. Well, Taylor, do me a favor. You put out a lot of great stuff every day. Where can people find it?
Yeah, find us at Life Goal Investments. We're on both Instagram and TikTok, just doing more simplified investing, finance, markets, making it tangible to everybody.
Awesome, buddy. You do a great job. Thank you.
Thanks so much.